Corn and soybeans going down due to rains in the Midwest. Jerry Gidel is ready to analyze right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So Jerry, we are forecasting, not we, but the meteorologists are forecasting a lot of rain for the Midwest, including Iowa. So it seems that has tumbled down corn and soybean.
Oh yes. We'll end up. There's weather market scenarios really got started this week with the crop conditions from the USDA coming down substantially here in the corn. They went down 6%, 5% in the beans in the good and excellent categories here, and then the Iowa and Illinois type scenarios went down double digits out there. So basically, that set the tone. Also, there was projections of someplace to get in some rain last weekend. There really wasn't much around. It's been back and forth all week on the projections for this rain event that's projected Saturday into Sunday at this point. Right here in the northern part of Illinois, it looks like it's going to be somewhat modest. Could be downstate, could be some places out in Iowa that could get over an inch. But man, we're still 7 inches behind in many areas of Illinois, and maybe just 4 or 5 behind in Iowa out there. So it'll be also highly important what happens next week in the forecast there. That particular one, we're going to be going towards the USDA's acreage and stocks report and a long weekend of 4th of July. So it's always an interesting time of year right now with the markets trying to plot a very interesting course.
Yeah, before we jump into your estimates, I would like to get your take on the livestock market. How is that impact the grain market?
Well, it's been a real interesting one to say the least. We had a really strong cattle market here a couple of weeks ago. It's backed off a little bit here. We did have a cattle on feed report today, and that I don't know. It's always interesting. The placements were probably a couple 3%, instead of 102 was 105 on placements on cattle, and marketings were about as expected, 102. So that increased our our inventories today for the 1st of June by 0.5%, maybe 0.75 from there. But it's 97%. It's still interesting twist here from the standpoint that it's a factor in the corn is a very highly used situations in feed yards. There has been some wheat use in the past, but because of the very tight supplies this year on wheat and carryover stocks, we're talking about right now we're at least 10 and 12 years back before we get to these 600 million numbers we're really dealing with. And so carryover stock wise, that there's always going to be a little bit of maybe new crop wheat fed into some into various poultry and pork ones, but it's a minor amount. So corn's going to be a hefty number. That's part of the things that's going to be influential here in our quarterly stocks number that comes out at the end of next week too. But the wheat, the markets right now have really been getting pretty volatile, both in the livestock and the grains, and that definitely seasonally the cattle market starts to wane after the 4th of July. That's because that we don't still have the same number of people eating and things like that. But it's surprisingly, it's the barbecue gets pretty hot in many parts of the country after July and August, so that there is as much of it that way from there. And spring and up through June is a very strong period for that type of demand. So on the cattle side, today's numbers slightly negative, but I'm not sure there's much pullback after the defensive tone we've had the last few days.
Yes, yeah, and indeed, you have anticipated this choppy market that we have right now.
Well, yes, the choppiness in the meat side of things, and also to some extent going into a weekend situation. Speculators always get nervous. We had a 3-day weekend last time. This time we had a normal weekend, and then next weekend there's going to be a lot of people even taking off Monday all the way through Tuesday next, the 4th of July. So that's another part of the whole scenario here that gets things. The participants in the market are not as prevalent, and they're not putting on substantial positions. So that adds to the volatility. That's exactly a little bit what happened to the corn market today that took quite a nosedive. It had moved above $6 in the September. Now, the reason I say September, because that's really where all the basis levels are at right now. It's not really in July and so it stayed up there a couple days, and then it slipped through that today, and then it went through the 200-day moving average about 10 cents lower, and that's what really started to get things on a negative here going to the weekend. I don't sense that the rain forecast was deserving a 30-cent break, but sometimes the people that are investors don't really look at relative values and things like that. It's just, oh, I got to get out because the market's telling me to get out because I watch the technicals and the moving averages and things like that. So that's part of the reason why why the corn market was pretty vicious today. Surprisingly, even the August soybeans, where the basis is at, was not as hard a hit as the September corn was.
And another factor is the grain corridor. We don't know what's going to happen there.
No, we don't, and that's still out here. That's the middle of July out here. More and more commentary all the time here from the Russians about there's no reason why they should keep it open, things like that, because the UN and the West hasn't supported them at all in their needs. At this point, though, I've heard that they have come up with an alternative location for their ammonia. I think it's probably back on the Crimean side of and that for load out of that. And interestingly enough, the spring offensive right now hasn't been doing all that well for them either. But the one thing that has popped up in this thing is that the Ukrainians seems to have worked out a deal to be able to utilize some of the Danube ports from Romania and things like that. So maybe there's going to be a possibility to get some more sea type of shipping going on there from that alternative versus the Odessa and other ports there in Ukraine itself. So yeah, it's still a dicey situation at this point. How much Ukraine's going to be able to get their exports going at this point. And that really, if they get shut out of this thing, that really does suggest that we're going to have more dependence on other parts of the world, probably the U.S., on supplying some of the corn and soybeans, or not so much soybeans, but wheat that hasn't been able to get out of the Black Sea.
Now, looking forward next week, you think soybeans is going up or down?
Oh, I think they're going to be able to steady a little bit. There might be a possibility of that tightening back up here. Interestingly enough, the weather, of course, will be an important part of it. But the other feature, of course, is the quarterly stocks and also the planning levels at this point. Quarterly stocks are interesting. It looks like that our crush statistics here, after a very good surge this last quarter, we're at record levels, and we're actually 10 million bushels above last year's total through this period. And so I do think that the USDA's 2.22 billion number is right in there, and even could see a slight increase in that if we get a strong June market that we'll get an update on next week on the update after the acreage number at that point. The soybean market is, interestingly enough, this time of year is important, but the impact of weather is significant right now. The bean crop also this time of year also has a kind of a shaggy look to it at this point, so it's getting some support because of the weather out there. But the late July and August period is really the timing spot on flowering and also pod setting, things like that. But right now, the market on soybeans is getting some Me Too operations. The one thing that did show up this weekend, which is something on a longer term basis, but also highly important, the EPA, who put out some preliminary numbers back in December, seemed to be very cautious about the expectations of expanded renewable diesel demand and all that type of thing. And so they were still, people were looking for a higher so-called mandatory level of renewable diesel and things of that nature. And when they came out with that data on Wednesday, that didn't help that soybean market. It took bean oil down sharply, down the limit, and that because of not these numbers that the EPA put out. EPA put out were not as high as some people in general are looking for, basically because of what they see out there in commitments from the industry about expanding. And this is all to meet the West Coast initiatives here on renewable diesel. California, Washington, two big port areas, and even Oregon is supposedly included in that. And so that's a interesting twist on it here, where the meal actually went up that day, primarily because people are getting out of their oil meal spreads. But in general here, the soybean market, I think, still has some very strong needs here for expanded soybeans acreages longer term. And I think that's going to be quite an interesting twist when we look at those numbers on acreage at this point. Originally, I was kind of looking for a slightly higher number, but not as I'm optimistic about that from the standpoint that it's northern plains issues and stuff like that. I think they went back to spring wheat because of the strength of wheat this last spring.
All right, we'll check it out and we'll get back next week.
Oh yes. Well, the other one thing we might want to do here is check into this corn. It's another biggie that's going to be a factor next week. Of course, the planting numbers and stock numbers are quite important. The stock numbers on corn, particularly, is going to be interesting here because, today's cattle report can maybe show us a little bit better feed demand in this spring than we thought. But at the same time, exports have been pretty shaggy. There's no doubt about it. From there, it looks like the Chinese have decided to source stuff from South America. Same thing on beans, but in the same scenario here in the corn, that's the one that I think is going to be watched the closest. And also because of the lateness in northern plains plantings, I think we're going to have a situation there where we could take off maybe it's in 570,000 acres of northern plains Minnesota type of type of acreages there. But interestingly enough, I think spring wheat's going to pick up some of that. And also in the Southwest, I think there's going to be a little bit of expansion in sorghum. But in general here, the stocks numbers that the trade's coming up with are pretty aggressive at this point. They're down under, I think it's 4.5 billion bushels. I'm a little cautionary that we're going to get that strong, but in general here, the stocks numbers next Friday and the acreage numbers will be watched very, very closely and could have a big impact going into the weekend. So if there's some bounces in this market here going into the next week, I'd probably go ahead and market the final part of your beans. I had 10% out there and maybe increase your new crop sales by 10 on beans. Corns, I'd also we've marketed some corn earlier around 20-25%. We'd stay with that and keep an eye on the corn. That's another one you might want to just go ahead and get the old crop out of there, and we'll watch the new crop the balance of the summer.
All right. Thank you very much, Jerry.
You bet. You have a nice weekend, and so hopefully next weekend you can get out there and see some corn in Pennsylvania.